All right, all right. Hey, just wanted to shoot a video update here with respect to this past week's action by the Federal Reserve. Just kind of share further our thoughts on expectations. What we look at, and as we've shared before, we believe rates are going to be higher for longer, and that has proven to be correct. So again, last week the Fed cut rates on the overnight rates, Fed funds rate, by 25 basis points to now 3.75 to 4%. It was kind of an interesting week because then also the inflation data came in, that also showed that it was a little bit cooler than expected, is what everybody was forecasting. So then the rates impact from tariffs was not as big as what people thought. Also oil prices coming down, rents have cooled a little bit as well. And so these were all things that were a positive. And then, Jerome Powell, not to be outdone by Trump and all this, is like, well, now with the data, it's a little uncertain. December's rate cut is not sure. And then again, you saw the stock market declined with that. Now, again, a couple of things we want to bring into line. You saw a number of companies, Amazon, UPS, Intel. I mean, good Lord, there's a list of about 30 companies that had announced layoffs. Like Amazon was kind of a big headliner. 14,000 people laid off at Amazon. Well, it's like less than 1% of their workforce. Okay, so it's not a big deal. But what is a big deal, and I want to talk a little bit further about, that's not really been in the highlight or the highlines of the media, is that they said they're eliminating redundancy. UPS said the same thing. Intel said the same thing. What's really going on, and I would suggest underlying it, is not only they are eliminating redundancy, but what has taken place is they're beginning to maximize and implement AI. There was another article that just came out that talked about how companies are moving forward with an expectation that they can achieve a leaner outcome without hurting or affecting profitability and or growth. And so what's going on, wink, wink, right now, is that companies, corporations, are implementing AI into their business models. And as a result of that, they're beginning to see a reality where they can begin to eliminate redundancies and cut workforce. And that's beginning to happen now. What I'm going to tell you right now and suggest, there was about 6 months ago, two interviews or two statements that came forward. One was by Mark Benioff, who's the founder and CEO of Salesforce. The other was Mark Zuckerberg, of course, at Facebook or Meta. Salesforce, he said that in reality, they would be able to achieve and do 50% of their current workload with AI in the near term. Now, this was not a real major headline, and about the same kind of comment was made by Mark Zuckerberg, maybe a little bit less bold than that. And the truth is, that's already happening in a real way. And so what we're going to see, and companies don't want to come out and say it, right? Because it's not probably solidly good for business and PR, but that's happening now. And in each of those little dissects that I looked at, there was just a blurb of mention about AI. But the truth is, underbedding it is they're being able to really advance that forward. So what does that mean? It's like, some of the glare and glare of the media is like, oh, the economy's going down, companies are laying off. It's like companies are really becoming more efficient. I'm not saying that the job market and the economy isn't a little bit softer. It is. But a big driver that we're going to see, again, apart from anything else changing, over the near term, meaning the next 12, 18, 36 months, is going to be a consistent rollout of people being laid off from those positions because of the implementation of AI. Now, again, when you think about the economy, there's also been some drumbeating about credit card delinquency. If you look at credit card delinquencies are up, but it's up from a historic low, because if you look at the chart on it, everybody got flushed with cash post-COVID, and delinquencies were down to like 1%. They're up at about 3.2 and dropped down to 3. Pre-2008, they were up about 7%. So we're not at the same place. Some people are using it like, oh my God, the credit card delinquencies are up, layoffs are up. It's going to be a recession coming up. It's like, well, it's probably a little premature to be able to say that. But I think it's important to keep an eye on things. There's a couple of things that I would say as well. I do believe that it's likely that there is a proposition for another rate cut in December. There's likely that there's at least another rate cut or two ahead in the year ahead of 2026. That brings us down to, like a 3% Fed funds rate. And again, apart from anything else changing. So I think that these are all things that, we're going to continue to see layoffs happening. There's going to be an improvement of AI that's happening in the implementation and integration across company lines in a multitude of ways. And then we're also going to see interest rates come down. Now, again, the bond market doesn't respond exactly accordingly. It's like, again, as soon as rates were cut by the Fed, the 10-year Treasury ticked up about 10 basis points. And again, it's a reflection of the supply and demand of the bond market. So again, it is good that rates are starting to move in that direction. Powell is going to be a little giddish and skittish, just because that's where he's at and how he's at. Again, he will be replaced next year, I think, come May. And so, again, there's a lot that's on the table here right now. But again, some of the people that are hitting heavy drum beats going, it's going to be a recession, it's falling off the cliff. We're not there yet. There's still data that's coming in about it, but I think it's important to be prudent, and it's important to recognize that, rates are not just going to come down quickly. And yet at the same time, there's also demonstrating what I would suggest, like I shared before, great opportunities that are starting to come in the marketplace in the form of distressed opportunities. So we're going to continue to keep you updated on these fronts and continue to share about these things. So you have a blessed and victorious week, for this is the week God has ordained for you.